Assalamu alaikum. How are you all? So I'm starting from September 2018 AFM paper. This is question number 2. The reason I have picked this question is, as you can see in the title of this video, it's ratio analysis. This is a question where we are going to consider all the ratios, right? All the available ratios, whether it's investor ratios, whether it's profitability ratios, because ratios is a very important thing in AFM, right? And most of the ratios takes a lot of time for you to do, especially in Excel. It has a lot of formulas and all the ratios, how to do a ratio. Even though you have to do your calculations in spreadsheet, you still need to write about each ratio in the word processor. You need to type the answer. So there will be two part up for this video. Part 1 will be only calculation. Part 2, I will tell you how to write. How do you write the ratios? How do you explain what each ratio means? Because that is also important. The question definitely will not ask you just the calculation. You have to write also, comment, evaluate those. The position of a company. What is the financial position or the performance based on the ratios? So you should know how to write. So part 2, I will be writing, explaining the ratios. Okay. So if you can see here, it's about this. Okay, let us go through the requirements. First requirement, I'm going to answer A. B is about behavioral factor, which I'm not going to cover in this video. It's a theory question. Make sure that you know what are the behavioral factors and all, because behavioral factor is another common theory question which is always asked. Okay, so evaluate the tinter's performance and business prospects. Okay, so this is the way a question will be asked, because directly, see, how do you know that you have to calculate ratios and all? The word will tell you. When they tell you evaluate the performance, evaluate the position of a company or financial position of the company or the performance of a company, you know its ratios. Here they have given you also. And in the light of chief executive's comments, definitely chief executive must have made some comment, and we have exhibit 2 for that. And the Steve Slinton's concerns, based on that we have to evaluate the performance. Provide relevant calculations for ratios. So relevant calculations they have given you. Now it's up to you, what are the ratios you want to calculate. They didn't tell you what are the ratios, how many ratios you have to calculate, but based on the marks, right? They have given it 20 marks and they have told 10 marks are available for calculations. Okay, always whenever they give you a mark and they don't tell you, so we take it, we assume that it's equally, right? 10 marks for calculation and 10 marks for writing it. Okay, so now let us go to the exhibit 1. Okay, exhibit 1 is talking about the company. It's a listed company. It has manufactured clothing and toys, right? Manufacturing toys, and it has made investment in development and production, and how it is with its competitors and all, right? And they're talking about the company also, that they have seen a significant increase in share price. Okay, and electronic goods sector showing rapid increases and all. Coming to 2, if you see, this is the executives chairman's, the chief executive's comment. Okay, what is it? I am very pleased to report that revenue and gross profit have shown bigger increases than in 2000, resulting in higher post-tax earnings and our company being able to maintain increase in dividends. Sustained increase in our share price clearly demonstrates how happy investors are with us. So you can see the revenue, gross profit are increasing, dividend has increased, share price increased. Okay, so cutting edge electronic toys even their electronic toys, they continue to perform well. Okay, and also operational efficiencies in older ranges and better working capital management. They are also considering the development of future ranges of electronic toys for children and electronic products for adults. Okay, and Steve Silton says, who is an institutional investor who holds shares in the company. Okay, he is doubtful whether the share price will continue to increase. Okay, why? Because she thinks the company situation may not be as good as what the chief executive is saying. Okay, because she believes, Steph believes the current share price levels may not be sustainable. Okay, if you see, it is two contradicting statements. Okay, the chief executive is saying share price will continue to increase, but the institutional investor Steve Slinton is saying that they might not be able to maintain that share price, current share price level. So when you evaluate the performance based on your ratios, you have to talk about both of these statements. Financial statements. You will be given a financial statements, okay? If you see. If you try to click, you cannot do anything, right? You cannot make any changes. It is already protected, locked. So whatever, if you have any exhibits, if you have a spreadsheet in the exhibits, you cannot do any changes to it. Okay? And you have been given for the 3 years. Sales revenue, gross profit, operating profit, finance costs, profit before tax, dividends, and all. Then you have been given the financial position for the 3 years. Okay. So, next. We need this for our ratios and other financial information. What is it? These are some other financial information, right? Definitely, when you have to calculate your earnings per share, price earning ratio, you need all this market price and all. That's why they have given you earnings per EPS, DPS. They have given to you, right? And the revenue, they have they have break down the revenue into the three sector: electronic toys, non-electronic toys, and clothing. If you see it's 1385, let us go to the financial statement and see the revenue. It is 1385. So this sales revenue 1385. When you go to other financial information, it is broken down. How it broke down? Here they have given you the analysis of the breakdown. Okay. Wait a minute, 381. So the gross profit. Okay, so this one is analysis, not analysis of revenue, analysis of gross profit. Okay. Here they have repeated same thing as a mistake. Because if you see, this is the gross profit. So now immediately open the spreadsheet. Okay. And mind you, you have to know each classification of the ratios. You have to know, let's say gross profit margin, what type of ratio it is. It is profitability ratio. So you have to label the type of ratios. Okay. And definitely this you can put it in appendix also. The requirement asks you what? Evaluate their performance. So to evaluate, the calculation will come in the appendix. If the question was calculate, then the calculation would be in the main answer. But now this you will put it under appendix. Okay. Just one. Next. So start with what? Profitability. That is the easiest, right? Profitability ratios. This I'm going to bold it out. Next. Take it for the 3 years, okay? 20x1, 20x2, 20x3. The 3 years. Okay. Now, profitability ratio, definitely you can take the gross profit margin, you can take the operating profit margin, you can take the asset turn. So if you see the marking scheme, all the possible ratios they have given. So if you calculate 10 ratios, that would be enough. But here they have included all the possible. So I am going to write all the possible ratios what you can calculate. Okay. In case in the exam, if you are not able to calculate all, at least make sure that under each ratios you calculate at least two, like under profitability ratio, liquidity, solvency, one or two. Under each ratio, try to touch each type of ratio, right? It should not be just all, it should not just be 5 ratios and all of them are profitability only. Let's say gross profit or net profit margin, gross profit margin, return on capital employed or asset turnover, that's it. No, you have to make sure that you calculate each type of ratio. There are 4 to 5 types of ratios: profitability ratios, liquidity ratios, solvency ratios, investor ratios. Make sure that you cover each of them. If not all ratios under each, but at least one or two. So first, what are we going to do? Percentage increase in revenue. You can even find, so you can find percentage increase in revenue. Now this ratios you can write in any order. There is no fixed way, rule or something that you have to follow this order only. Okay, so percentage increase in revenue. How much your revenue has increased each year? You have been given the revenue of 3 years, so that you can do. So when you go to the financial statements, you can do it. Okay, or what you might do is you might even copy paste this. Okay, it's better that you copy paste this sales revenue somewhere so that you can find the percentage, this thing, if you want to find out. Okay, in case you can copy paste the sales revenue here. Okay, well, take the name, copy, paste. So if you put it in one cell, it will come in automatically, it will come in all the other cells. Okay, you can keep this table here. What's the reason? Why are they showing it in two? Wait a minute. Okay, so whatever is in bracket, it is just taken on this side. Okay. So now, when you take the percentage increase in sales from 2001, wait a minute, just, okay, so 2001, I'm just putting the number, okay, 1, 2, 3. So definitely for 2001 you cannot, because you have to find the change. Okay, so this will be blank and go to 2002. How can you find this thing? Equal to difference this minus this, close bracket, divide by this one, enter. Okay, what's happening here? So here, okay, again I'm going to do this minus this, divide by this, enter. It should come in 2002 only. Okay, I have to extend this cell, make this cell big. So what happened? Since it's a big number, that you round it up. So it will be, if you round it up in terms of percentage, this you can take it in percentage also. Okay, that's into one decimal place. So you just go to percentage, okay, and click this, and it will take it into one decimal place. That's it. So next also, make sure that you copy paste it from here, okay, so that you can take the difference. Okay, now same, or let us see, if you drag, what happens. Let's see. You can drag it, okay, because once you drag it, just check the function is here, formula. Okay, it has already taken the difference of this two and divided it by this second year. So that means only in the first year you have to do the working. Next, you can just drag it, and this saves a lot of time rather than you individually doing for each year. Okay, once you have done for 2002, automatically drag it for 2003. You don't have to do it again manually. Okay. Make sure the first time you enter your formula is correct. So when you drag it, all the other cells will be correct. Okay. This saves a lot of time. What is the next? Next could be your gross profit percentage or gross profit margin. Okay. I'm going to write GP margin, gross profit margin. So what is the formula for gross profit margin? This you can calculate for all the 3 years. Once you calculate for 2001, just drag it. It will be copied in 2002 and 3. So what is the gross profit? Gross profit is this divided by sales. If you see this, okay, this you have to take it in terms of percentage and 1 decimal place. 27.5. What happens? Just drag it to the other cells. Okay. In the second year, something. Just wait a minute. I have a little doubt in this second year because if you see, this is the gross profit. This is too less, right? Okay, just check again. Gross profit. Okay, it's correct. Next, we have percentage increase in gross profit. This also. Okay, percentage increase. Whenever percentage increase comes for the first year, you will not have it's blank. Go to the second year. Okay, so when you see the gross profit, it will be this. Okay, it will come in negative if you see. Why? Because the gross profit in the second year is much less than the first year. Okay, but still, when you take it, take this minus this, otherwise it might come in negative. Divide by this. Wait a minute, there is something is. Just take it to this. No, something is wrong somewhere. So just undo. Because that's not what I'm having in the answer. Okay. Percentage increase in gross profit. What is the percentage increasing for sales revenue when we took? cannot be 81% increase. Something somewhere is wrong. It is supposed to be 18.4 and 17.1. Because even if you take the different like this also, in the margin also, it is coming as it is. But in this answer, okay. Okay, so we'll go by like that. Okay, what you can do is you can even do this. This. Okay, we'll go by this minus this divide by this divide by equal this minus this divide by first year gross profit. This as a percentage. Next, even though it's not increased, it will be decreased only because gross profit went from 381 just okay. Now I'm just going to drag it to the other cell. They have taken it as 45 minus 528 divide by 45. Okay, we'll keep it as it is because if you see in percentage, this is in negative and is very big. It cannot be more than 100%. I'm sorry for the delay, inconvenience and all, but we have to get this right. If we don't get this right, then rest all whatever is, it will be wrong. So for time being, we'll leave the profit. Okay, we'll not do this. And we'll go to the next one, which is operating profit percentage or operating profit margin. Operating profit is operating, so the formula is operating profit divided by sales. You take operating profit divide by sales into 100, or you can take it in as a percentage directly from here. Okay, 14.8. Next, just drag it to the other two cells. Okay, next we have percentage increase in operating profit. Okay, so this will change to OP. So here you can do the difference between the two operating profit, this minus this, divide by this. And this you can take it in terms of, okay, 22.9 and 19, which is correct. Okay, next we have, so we are done with gross profit. Gross profit, I've left it for time, we'll cover it at the end. So this is what you have to learn. When you're stuck somewhere, something is not working, don't waste your time to get to be perfect in that one and find out. Leave it, go to the next ratio. If you don't need the gross profit margin for the next, if it's not related, you can do it. Net profit margin, it is not related to gross profit, you can do it. You don't need the gross profit margin to do that. So leave it and go, and at the end when you have finished all your ratios, whatever you have not covered, you can go and do it. Okay, so ratios under profitability till now we have covered as gross profit, operating profit, okay, the margins and the increases in it, and also the increase in revenue. Now we have two more ratios, asset turnover, which normally students don't calculate. Okay, so the formula for asset turnover is equal to, I'm just saying the formula, okay, make sure you know the formula. It is revenue divided by total assets minus current liabilities. So what you are going to do is revenue you are taking sales, okay, divide by, in the bracket, what you have to do is total assets minus current liabilities. So total assets, if you see, you didn't take it, it's here down, which you didn't copy paste. Okay, so total assets will be this 2230. Okay, so before you write this, make sure that you copy paste this also below. Copy. When you take it and press it in one cell, it will automatically copy it, okay, like this. So what you have to do now, asset turnover is equals to your sales revenue divided by, in the bracket, total assets is this minus, okay, this is the formula for asset turnover, sales divided by total assets minus current liabilities. What is your current liabilities? 105, close bracket, enter. Okay, this is not in percentage, okay, this you will take it in two decimal places and drag it to the other cells also. Do you see, only 1 year you have to take, other cells you just drag it, that's it. But the formula has to be correct in the first column, first year. Next, the last one under profitability, the ratio which we have is return on capital employed percentage, okay, return on capital employed, so ROCE. Okay, this ROCE, what you can do is, this will be in percentage. The formula for this, operating profit into asset turnover. Okay, another formula you can use is operating profit into asset turnover. There are many formulas for return on capital employed, make sure that you know. So since you have calculated operating profit and asset turnover, you can use both. See, this is the advantage. When you have taken one ratio, previously you have calculated like asset turnover and operating profit, both now you can use to calculate return on capital employed. Okay, operating profit percentage. This multiply by asset turnover, it is this. Just drag it and just take it in percentage to decimal place. Do you see? Automatically it takes it. Now we are done with all the profitability ratios. Next we are going to go to liquidity. In liquidity ratio we just have one, which is current ratio, and this should be something very easy. Okay, so liquidity, I'm going to bold it out. Next, write the name of the ratio what you are calculating. Current ratio. Okay, current ratio is current assets over current liabilities. So equal to, go to this, okay, current assets. So current assets will be this plus this, okay, cash equivalent plus this, divide by current liabilities. So current liabilities is this. Enter. Okay, and make sure you drag it to the other cells and take it into to two decimal places. Okay, next we are going to the solvency ratio. In solvency we have what? Gearing and interest cover. Okay, so first let us take the interest cover, since it's something that's easy. What is the formula for the interest cover? In the formula sheet you will not get the formula for the interest cover. Okay, what is the formula for the interest cover? It is profit before interest and tax, or profit after tax divided by interest. Okay, profit before interest and tax, operating profit divided by interest. What is your interest? Interest is your finance cost, 46. Enter. It will not show because it is in bracket. If you see this is in bracket, it will not show. So what do you have to do? Format cells, take it in bracket. Okay, okay, so now enter. Okay, so the cells, the cell, format the cell. So equal to your operating profit divide by your interest. Interest is your finance cost. Okay, 46. Okay, okay, so make sure that this all are in minus. Okay, so this all things you should know. Now if you see, the interest cover is coming as 4. Okay, minus 46, but it is supposed to come as 4.5. So we'll change this one. We'll take profit after tax. No, it's format cells when taking this. Interest cover will not come in negative. Okay, even though your finance cost, your interest is in negative, but your interest cover should be positive. Okay, or what you could do is, it would be $205 divided by, just write the tax, 46 is your finance cost. Now in the interest cover, something is this wrong. Okay. Okay. Because it was supposed to be 4.5, not 4. But we'll see. And the next year, if you cannot drag it because you have used a number over here. We'll see what happens. Okay. This is correct, the 5. No, but the finance cost is 50. Okay, it is 250. 2 divided by 50. Operating profit. So this H5 is what? H5 is operating profit only. 252. It will be divided by 50. 5. Okay, so this is correct. And this will not be 46. Here the interest cover is 66. So it is 66. Okay, the reason why it's showing 5, it is supposed to be one decimal place you have to take it in. Okay, so you can round it up to one decimal place. Because they have taken 4 point, they have taken it as 4.5, the interest cover. Here if we take it 4.46, here they have taken it as 4.5, here also they have taken it as 4.5, but we'll take 2 decimal places also, it does not matter. Okay, next what do we have in the solvency is gearing. Gearing, you can take 2 ways of calculating gearing. I'm going to show you both. First of all, gearing you can take based on market value or book values. First I'm going to take the book value. Okay, so the gearing, the formula for gearing is, I'm not writing the formula for, if you are taking the market value. Okay, so non-current liability divided by non-current liability plus market value of share capital. Just wait a minute. Since we are taking the market value of this one, so we have to take the share price and all those things. Make sure this other information is also, you have copy pasted it in this thing. Paste. Okay, so here gearing equal to, what is it? Non-current liability. Your non-current liability is your non-current liabilities only, because long-term debt you have to take for gearing. Okay, no short-term debt, that's why we are not taking current liability, divided by non-current liability plus your market value of share capital. What is the market value of share capital? If you see the share capital, it's 400, right? If you take it, but the 400 is the book value. What is the market value? If you take this 400, what happens? Right? Sorry, you cannot take 400, you have to take 800, because 400 divided by 0.5, so 800. 53.5. Oh, you have to take. Okay, first let's take by book value because this 800 is the market book value, not the market value. Plus you have to add your reserves also. Okay. If I'm getting it based on that, the book value, what's happening is I am getting a different. Okay, let's take this as 400. Yes. So what you have to do is, for the book value, what I did is non-current liability 920 divided by 920 plus the shares and reserves 400 plus 805 as it is when you're taking it by the book value. Okay. Now drag it to the other cells. This is gearing based on book value. You're taking it to 2 decimal places. Okay. 0.4 of gearing. Okay, let's not take it in terms of percentage. Okay, take it in terms of percentage. Take it in terms of 1%. So 43.3, 43 and 42.2. You have to take the gearing in terms of percentage. Now gearing book. Okay, your share price is based on book value. Now gearing on market. Okay, I'm just writing the short form. Gearing based on market value of shares. Everything remains same. Your non-current liability divided by non-current liability plus reserves will remain as it is plus now comes your share capital. Okay, market value of share capital. Okay, here we are not taking the reserves in the market value. So share capital, here what they told us, if you see the share prices here, make sure this whole thing is so that you see the whole thing. Okay, so market value is 0.5. So here equal to you will go up and take the non-current liability. You have to drag it, divide by non-current liability plus, if you see the share price, it's 800 plus 800. Definitely not, because when you take the market value, your share price will increase. So when your share price increases, denominator increases, definitely your number will reduce. So definitely you will know your answer is correct or not, because compared to this book value, your market value gearing based on market value will be lower. It has to be lower than 43.3% and this is higher. So it shows that you are technically wrong. 2.76 is your share price. 2.76. So you take 800. Okay, 800 and multiply it by the share price. What is it? 2.76. 53.4. Or just take 400. 400 multiplied by the market price, which is 2.76. You have to get 29.4. That's what you have to get. 29.4. So this is something is wrong somewhere. Okay. Or maybe we have to add the reserves. We'll add the reserves and see. So long-term liability plus reserves plus the share capital. 32.5. It is less, but then still it's not right. $23.4. It is supposed to be 29.4. Something is somewhere wrong. Non-current liability divided by non-current liability plus market value of share capital as percentage. So the shares are how much? Just look at the shares. 2.76, 3.49 and 4.44. 2.76. And the number of shares are so definitely something is wrong. This is your non-current liability over non-current liability plus your, okay, let's not take your reserves. $400. $29.8. Let's check. 25.8 and 28. No, it is wrong. So this is what happens when we don't know how to calculate the market value of share capital as a percentage. Okay. Let's not take the reserves. Okay. And let's take this as 800. Yes, now it's correct. Okay, you don't take reserves in the book value, market value, sorry. You just take non-current, divide by non-current plus your share capital. Okay, when you take your share capital, 400 divided by this 400, okay, divide by 0.5. 800 multiplied with the share price. Okay, so every year it was 800 only. Now you can take it and take it in terms of percentage to one decimal place. Now if you see, it's correct. 29.4, 25.8 and 22. Okay, with that solvency ratios are over. Going to the next type of ratio, the last, which is investor ratio. Okay, in the investor ratios we have EPS, DPS. Sometimes ratios are given, still write it. Okay, you don't have to calculate, like EPS, DPS. Okay, EPS means earnings per share. DPS is dividend per share is given to you. You can write short forms for this. Okay, has already been given to you. Where it's given? Here. So what I'm going to do is I'm just going to copy paste this whole thing. Okay. So if you can see, next we have dividend cover. Okay. What is the formula for dividend cover? What is the formula for dividend cover? See, dividend yield, dividend per share, dividend cover, three different things. Okay. It is the net income divided by your dividend. Net income means profit after tax divided by your dividend. So, what is your profit after tax? It is 119 divided by your dividend. 119 divided by 60. Okay. So what I'm going to go there and do 119. You can even write here. Okay. Rather, see what happens is when you come here, rather than dragging and all, it takes waste of time. So you can type here. Divide by 60. Enter. It will show you value because it is in bracket. So what happens is you can even write here. You can take it from here and write. You can write 60. But this time you cannot drag then if you write 60. 1.983. Okay. Next. So next is, it's always profit after tax divided by this. 151 divided by 72. You can even write the number as it is. 152 1 divided by 72. And the last one is, what is your profit after tax? 169 divided by 84. Divide by 84. What I'm going to do is take it to two decimal places. Okay. So 1.98, 2.1 and 2.01. Market price. What are the market price? Just copy it here. All these things are not needed. Okay. So market price per 0 point share. And you can just take the market price and copy it from here. So these are not extra ratios. Okay. The reason you are keeping it here is for to calculate some ratios. Price earning ratios and all those things. Okay. Because your next ratios needs this prices. So next is price earning ratio. PE ratio. Okay. So for the price earning ratio, what is the formula? It is the price divided by your earnings. EPS. Enter. Wrong cell. It's this. Enter. So if you see, it is 18.4. Just drag it to the other side. Now do you see why you have copy pasted this market price here? Because if you didn't calculate this, imagine going here again, going to this EPS, in order for you to calculate the price earning ratio. Sometimes when you need such ratios, keep it ready in one table only. Okay, so 18.4, 18.3.7, and this one. Next, we go to the next one. What is it? If you have to take it anything in one decimal place, you have to round up. Okay, round, click that number, round equal to round, click that number comma 1. You don't have that function here automatically to take it to one decimal place. You can take it to two decimal places. Okay, but in percentage, yes, you can take in one decimal place, but not as number. Next, we have dividend yield, dy. Okay, write in short form, dividend yield. So the formula for dividend yield is DPS divided by share price. DPS, sorry, make sure you correct the click cell. Okay, DPS divided by share price. Share price is this. Enter. Okay, and this as a percentage to two decimal places. Wherever percentages are required, something needs to be shown in percentage, write a percentage sign in front of it, so it is understood for you. Okay, next we have share price gain or loss. This has to be there in AFM. It's there in AFM. Share price gain or loss. If it's gain without bracket, if it's loss in bracket. Okay, and this is also in percentage. How do you take the share price gain or loss? Simply just take the share price. Okay, if you see the share price, what is it? It was 2.5 in 31st March 2000, and then it increased to 2.76. So you just take 2.76 minus 2.5. 0.26. It has supposed to be. No, this is not the way. Something, because it is showing 10.4 and all three are gains. Okay, share price gain or loss percentage. And definitely it will be gain only, because if you see the share prices, it's increasing only. 2.73, right? From 2.5 to 2.7, then 676, then 3.49, then 4.44. Yes, you need to multiply with 400 the share price. What I did, okay, so this minus 2.5. Okay, make sure that you take bracket, multiply it by the share number of shares, okay, which is 400. Enter. But this has to be taken in terms of percentage. Sorry. It will be 10.4. So multiply it by 400 because that is this thing. Okay. And this are in what? Share price gain or loss. Take it in terms of percentage. 104%. No, it's not 104, it is 10.4%. Just undo. So what happens is this minus 2.76 minus 2.5 into 400. Okay, it's 104 the gain. But they have taken it as 10.4. Okay. Maybe when they are taking it as percentage, they divide it by 100. Yes. This whole thing. Divide by 100. .76 minus 2.5 divided by 100 into 400. Okay. They might have divided the whole thing by 100, but no worries. What you can do is no. You divide this by 100. Okay. We divide this by 100. Let's see what happens. 1.04. And if we take it in terms of percentage, it will be 104 only. Okay, this 104 is divided by 100. When you divide 104 by 100, it is 1.04. But here, okay, let's just drag this. No, it's not. Something is missing here. Right, we are almost done. Because if this is wrong, your total shareholder return as a percentage will be wrong. Okay, 10.4. We'll see why it's 10.4. Okay, we'll just leave it for time being. The share price gain or loss. And then we'll go to total shareholder return. It is known as TSR. Okay, total shareholder return in terms of percentage. Okay, so the total shareholder return will be what? It is your dividend yield plus share price gain. Okay, just simply the sum of dividend yield and share price gain. But since your share price gain you're not getting, total shareholder return also you cannot get. Okay, so for time being we'll keep it and we'll go to the types of product. how will you know that? How will you divide the time between doing calculation and writing? It is simple. They have told us 10 marks for calculation. So 10 into 1.8, 18 minutes you will be spending on calculation. Once we have finished those 18 minutes, stop calculating whatever you have calculated. Now you can start writing. Okay, by part 2 of this video, I'll be writing. So now the types of products. Okay, now you're dividing it into each type of product and knowing it. Okay, for example, you are dividing it between the three: electronic toys, non-electronic clothing, and then you are seeing the percentage increase in revenue, the gross profit percentage, and percentage increase in gross profit. For all the three things you are doing it. What is it? Electronic toys. Okay, for electronic toys, what you are doing? Okay, let me bold it. Electronic toys, you are doing percentage increase in revenue, because you want to see in terms of revenue. When you take the performance, it's not just the whole revenue which you want to see. Individually, based on the product type, you want to see what is the revenue. Then the next one is gross profit percentage or gross profit margin. The next one is percentage increase in gross profit. So this three ratios under each you are doing. Okay, next take non-electronic toys and copy paste all this. So when you are not able to paste it, just okay, paste. This is in bold. And the next one is clothing. So clothing also I'm going to copy paste. Next I'm going to copy paste this three, and I'm going to calculate. Okay, just I'm going to bring it so that this, you just make sure that okay. What you can do is, this is, you need to be smart enough. Okay, when you have let's say you have to scroll like this and like this, it wastes a lot of time. So just drag all the cells near and bring it in one page, so that on one sheet you can see like this all the three revenues and all. So what is the percentage increase in the revenue and all? I need the cell D. Okay, it is here. D is here. Okay, so now I can see percentage increase in revenue. Definitely first line will not be there, so just take the revenue. Okay, it is this minus this, divide by this, enter, and take it in terms of percentage into one decimal place, and then just drag it to the next cell. Okay, next when you are coming to this gross profit percentage, okay, so it will be your gross profit. This is your gross profit for electronic toys divided by your sales, this one. This you are taking in terms of percentage. Go to percentage and one decimal place, and then drag it to the other cells. Okay, next we have percentage increase in gross profit. So if you want to see what is the percentage increase in gross profit, what you can do is this minus this, divide by this. Okay, it will be 12%. Just take it in terms of percentage, 12.6%. Or the other way of doing this is, which is more correct way, is percent increase in gross profit. Okay, so what is it? This gross profit, this minus this, divide by this previous year's gross profit. Okay, this is more accurate. 12 and 0.9. Next. So likewise you can take for rest all the same thing. Okay, when you go for the non-electronic, you take for the non-electronic toys the revenues. Okay, so this minus this, divide by this, divide by this, divide by this. Okay, this you take in terms of percentage, one decimal place, and then drag it, and then gross profit. Okay, the second analysis of revenue is your gross profit. Okay, this divide by your sales in non-electronic toys. You take this in terms of percentage to one decimal place and then drag it to the others. No, this plus sign has to come, and then increase in gross profit. This minus this, divide by this, take in terms of percentage. Okay, just see how much time I took for that. Okay, you need to be very quick on all those things. Now when you come to clothing, also same. It is this minus this, divide by this, put it in terms of percentage, drag, and gross profit. Okay, gross profit of sales, this you are taking in percentage and then take into the other cells and percentage increase in gross profit. So this minus this, divide by this, take in terms of percentage, drag. Okay, I don't think about 1 minute it took me to finish all this. So rest everything is correct except some areas where it's wrong. What are those areas? This and this. You see here, pay clear attention, don't just blindly. Okay, if you see this one and this one, this too, it is kind of, there's a mistake. Okay, especially this, it makes sense, right? It's minus 100, and if you see there's a slight increase in, there's an increase in revenue from here to here. The reason why is, now do you understand, it has taken this cell. So what you have to do is, okay, it will be percentage is increase in revenue. Okay, so equal to this minus this, divide by this. Oh, sorry, this is for clothing. Okay, so for clothing it is this minus this, divide by this. When you take for next, it will not come because here there is no number. So what you have to do is, you have to take this minus this, divide by this, 15.8. Now it's correct. Okay, how do you see? So wherever you see such unusual numbers, minus 100, more than 100 percentage, or the signs are different, then you know that something is wrong, because it cannot be negative. Definitely it increased. You can see the revenue increased. So this is okay. Even if you see this number 0.5 and 15.8 is very different, so it shows you always watch out for this unusual trends and all. That means somewhere your calculation might be wrong. Let us do this. No, you cannot drag it back. Okay, so equal to this minus this divided by this. Now it's correct. Do you see 15.9 and 15.8? It is much aligned, similar. So you know it's correct. Because just check the increases. This cannot be 0.5. It cannot be 2 less than this, because the increases are not, it's very similar almost. Okay. So now it's all correct. We have to work on the share price gain, and we have to work on this. Even somewhere this went wrong. The percentage increase in gross profit. Right, we were not able to do it. So now we have finished all the ratios. Now we can come back and do the ratios which are remaining. The percentage is increasing gross profit. Okay, so now okay, now it's understood why this is coming wrong. If you see the gross profit here, it's 45, but here it is showing 451. Okay, that's why this everything was coming wrong. That's why for all this you need to pay close attention sometimes, right? It's 451. So definitely when this is changed, this also will change. Now do you see 27.6? It changed because this number was very small. So it made no sense. Now when you do your percentage increase in gross profit, it will show the correct answer. This minus this divide by. This is why for ratios, when you specially do, you need to pay close attention. Right? You need to pay a very close attention to all the numbers, how it is compared with the other numbers in that group. Is it in that range? If something is outside that range, if it's some numbers very small or very big compared to your other numbers in that ratios, something is wrong. Please check for that mistakes. This is the way you identify mistakes. Okay. Now if you see the percentage increase in revenue, this is impossible. Okay. So it is this minus this. No, just about bracket divide by 381, enter. Now you can drag it, right? Now it makes sense. So now we have done with this gross profit. What else is remaining is, it is this, the share price gain and loss and the total share. See, once you get this is correct, okay, this correct, total shareholder return is just the sum of dividend yield and share price gain. So only our worry is for the share price. Okay, even if you multiply this by the number of shares, which is 400, it is 104. But my problem is the gain is coming in terms of 10.4. So something needs to be, something somewhere is wrong, right? Can go and check. Okay, so it is. So it increased from 2.5 to 2.76. Okay, there's a gain. That's why we have taken 2.6 minus 76 minus 2.5. Is it 2.5 or 2.05? 2.5. You can even see the number of shares. Okay, so definitely something somewhere is wrong, because if you say in terms of percentage, you can just take it in terms of percentage. Okay, we know that somewhere something is wrong, because it cannot be 10,400 percentage. Come on, because your dividend is 2.7 and this. Okay, it definitely has to be less than 100% only, all your ratios. Okay, so the reason I will just, so this is the older thing which is bothering me so much, because the rest all everything is correct. Because you need to comment on this. Okay, the total shareholder return, and also you cannot just skip it also. So that's it. This is the end of this. Okay, part 2, I'll be writing all this. I'll be using this calculation and I'll be writing in the word. You should know how to evaluate the ratios and write. Okay, let us see for this. We'll calculate this individually and see. It will be 3.4 minus 2.76. 29.0, right? And this, if you are taking, it will be 4.44 minus 3.49. Okay, definitely all are gain. Okay, in terms of percentages also, if you see it as something somewhere is not right. Whenever something like this comes, it should strike your mind. There's something somewhere is not right. Check out the other things. whether other things are correct or not. Okay, if you see the share price and all, right, look at just share price. Okay, 104. Okay, so I'm just writing the answers. What the answers has to be. It is 10.4. This is 29.03. And this one is 29 point, sorry, it is 26.45. 26.445. Just remove the percentages, okay? And this one will be 27.22. Okay, just make sure that you remove the percentages. How do you remove the percentages? Just go to format cells. Go to format cells. 10.4. So just you drag it, it will take it 10.4 to the other cells also. This also you need to go to format cells and take this, okay? And this one too. Format cells and okay. So when you take the shareholder return, it will be sum. What did they do? When you take the sum, there will be a mistake. Always make sure that you do errors in Excel and learn. Okay. Mistake is this is in percentage, this is without percentage. Okay. So when you are taking, what you will do? Just remove the percentage. You can wait, undo. What was it? This in terms of percentage. 2.72. So here where you can see that a lot of time is wasting for you to convert this into number and all, what you can do is just when you are adding it, you can just take the number as it is, type like this 10.4 plus 2.72, enter. Okay, then you need to add for each separately. You cannot drag to the other cell. 2.58 because both are percentages only. Both 2.58 and that 26.45 are percentages only. 27.22 plus 2.36 enter 29.58. So if you see, it increases. But I leave this up to you, that go and find out the share price gain. Okay, if you get for first year correctly, you will get for the other years also correctly. So your job is to do that. With this, I end this video here, and inshallah see you in part 2.